Good evening, everyone, and welcome. And for newcomers to Tortoise, welcome to your first ThinkIn. It's an open news meeting, a chance for us to try and get a better understanding, not of the breaking news, but what's driving the news. My name's James Harding, and as some of you can tell, there are also Tortoise members who've been here before. To Chris Chadwick and Andrew Girdwood, I say you are extremely relieved that I'm not singing this song. Singing is definitely not one of my strong points. But what is the case is that I have been completely obsessed and fascinated by cryptocurrency for probably not as much as a decade, but probably from the first reading of an article on it about 2011. And when we held our very first ThinkIn, the very first open editorial meeting we held, the question we set ourselves was, should cryptocurrency be banned, regulated, or embraced? And the idea of holding it was this. The idea was that journalists in an open news meeting might have lots of opinions, but little expertise. And what would it be like if we opened up the editorial conference and brought in people with direct expertise to make sure that we came away with a better informed opinion? And in fact, better than that, what if we opened the whole room to everyone to bring their personal point of view? And so we introduced the ThinkIn. We intended it to operate much like my old kind of leader conferences at the Times. People weren't asking questions, they were bringing their point of view. In fact, we've got a loosely enforced rule, which is no questions. We want to hear your thoughts, your point of view. And I hope that in the course of the next hour, people will really help us on this adventure into Bitcoin. That will help us understand who you think Satoshi Nakamoto might be, and perhaps more importantly, what she or he, what Satoshi Nakamoto has created, what Bitcoin means, and the creation of cryptocurrency. I'm extremely grateful that we are joined by Noelle Acheson, who is the Director of Research at CoinDesk, which is like the sort of, well, I don't know what it is. It's sort of the British Library of thinking about cryptocurrencies, Noelle, the place that you'd come to for a wealth of information. Tavonia Evans, who is the founder of Guap coin, which I understand it is also focused on crypto, Tavonia, in terms of boosting Black and community economics and businesses. And so looking forward to thinking about the potential of cryptocurrency, Bitcoin, but others as well. And Diana Biggs is joining us too. Diana, thank you for your time. Diana's the CEO of Valour, which focuses on exchange traded products and not least digital assets. So Diana, thank you for making time this evening. Those people who are new to ThinkIn's, please do weigh in, share your thoughts in the chat. My colleague Kim Darrows here is going to help make sense of it all, and try and also explain that sense maker guide that we put up at the start. But let's get started. And Noelle, let me start with you, if I might. Who is Satoshi Nakamoto?
Oh, I can't possibly say. He's asked me, or she's asked me not to. No, truthfully, we don't know. And truthfully, I hope we never find out. The reason I hope we never find out is that one of the reasons I am convinced that Bitcoin will endure, will be successful, is because we don't know. It's almost like the sort of creation myth, if you like, and it's what makes Bitcoin decentralized. There is no figure of influence or authority to dictate what it should be or what it should do or what it should become. Unlike other networks who do have figures who are in control, Bitcoin is totally decentralized because it does not have a figurehead. Even Ethereum, which is very decentralized, we can't argue that. It does have figures of influence who could, could impact the value of the underlying asset should they decide to go off in a different direction, which is, again, very, very unlikely. But Bitcoin is the true decentralized cryptocurrency because we don't know who Satoshi is.
And can you, I'm not an insider on this, so can you just help me out and just go right back to the beginning? So what was the paper in 2008? What did it say, and what clues, if any, were given to the identity of Satoshi?
Many people have spent their careers trying to figure out who this is. Back in 2008, an individual or individuals who went by the name of Satoshi Nakamoto published a white paper, which, according to the abstract, was to design a peer-to-peer value transfer, cash if you like, the transfer of value between two entities without going through a financial intermediary. Paraphrasing there, but the innovation, which built on the work of a lot of people that went before, was to create a consensus mechanism that enabled the network as a whole to compete, to work on validating transactions and to make sure that everyone was in agreement with the ledger. A lot of technical stuff there, beautiful technology, by the way. If you are interested in that sort of thing, I recommend reading it. It's quite easy to read, white paper. But what he was trying to do was recreate the privacy and fungibility of cash online. The thing about cash is I can pay someone in cash and I don't need to know anything about them. I don't need to ask anyone permission. I can give someone part of my value for a service they've given me without knowing anything about them. Online, however, that's an entirely different equation. We not only need to know who these people are, where they live, their bank accounts, their financial histories are suddenly open to discovery. It's a definite step away from the privacy and towards the centralized control over financial intermediaries. I fell in love with the idea of Bitcoin when I realized that it enabled people to transfer value without going through financial intermediaries, without the need to have a bank account. I spent most of my childhood in Africa, and so that kind of resonated with me, what that could unleash in vast parts of the world that don't have access to the financial systems that we have here in the Western, in the developed world. And economies of entrepreneurship, on the privacy and independence, financial independence, the potential for that was fascinating. Of course, these days, it's not the main value proposition that people are investing in Bitcoin for. It doesn't mean that it's not extremely important, because today we see Bitcoin as a store of value, because it is potential money type. It is a potential money that has a hard supply limit. And with what's going on with monetary policy elsewhere in the world today, that resonates.
And Noelle, you said privacy and fungibility. Can you explain what fungibility is and what does that mean?
Like cash is fungible, no one really cares what happened to the dollar before it reached your hand, or the euro in our case, or the pound in your case. Like cash, Bitcoin doesn't have to come from a particular destination. I can pay anybody anywhere in the world with Bitcoin, assuming they accept it, without having to ask permission from a centralized authority, from my bank, for instance, who's going to want to know where that money came from. Mm-hmm. The electronic money that we use today is not as fungible as we are led to believe.
Okay, well, I want to come back to that, because I want to come back to what it's become. I want to bring in Tavonia and Diana first, though. Tavonia, do you have a theory of who Satoshi Nakamoto is? And do you, rather like Noelle, hope you never find out? Or would you quite like to?
I have my ideas. I do feel like a lot of people think it's a group of people, a group. I do feel like it is an individual, for sure, that much.
It is or is not? Sorry, I didn't hear you, Tavonia. It is.
I do feel like it is an individual.
Okay.
Like this is an individual effort, more so than a group. Some people think it's a group of people or whatever. I do feel like it was an individual, because as a person who has, of course, worked on and developed a blockchain, I know that, yeah, an individual can do this. In the world of technology, all it takes is one to do something of this sort. However, I do feel that there has been a huge deviation from the original core mission of Bitcoin and what it's supposed to accomplish and who it's supposed to accomplish it for. Because this is such a grand experiment, and when you get into blockchain, like creating a blockchain, you never really know where it's going to end up, i.e. Dogecoin. The founder of Dogecoin did not ever believe that it was going to end up here, because he actually sold all of his coins. So, so he didn't think it was going to make it this far. So you never really know where it's going to wind up. But the core principle of Bitcoin was to establish an alternative to the current financial system, and to allow for a peer-to-peer cash transfer. But what it seemed to have turned into is an institutional asset rather than a currency or cash. So, that's where we are today.
And by the way, I want to get into this in a moment. The point that Noelle made about privacy and fungibility, about tenure and anonymity and the ease of distribution and sharing. Do you think that the soaring of the value of Bitcoin, Tavonia, has fundamentally changed the way people think about cryptocurrencies? I.e., they're no longer really currencies, they're assets. Yeah.
Absolutely. Absolutely. That it is the pure value of it, and the time it's retained its value, for the fact that it's been around for over a decade and it hasn't gone back to zero is what's captivated some people's attention. So they kind of see that this is here for the long term in some form of fashion. And they're way more vested now. They're way more comfortable, and they're even more comfortable because institutions have gotten involved.
All right, but I'm going to come back because I really want to get into at some point. I noticed that some people have already been pointing out the potential value of cryptocurrencies, particularly for those people who don't have access to cash or bank accounts, etc. But Diana, before we get into that and the sort of theories and the possibilities, what's your view of the question, the Satoshi Nakamoto question?
Yeah, personally, I would agree that I think that it's an important and good thing that nobody knows who that individual or group of individuals are, because I think it just lends itself to the strength of this particular protocol, given the original thesis of it being like purely peer-to-peer and really something that it has moved away from any intermediary or any central party that has control. So it does have that advantage, even though, as Noelle mentioned, Ethereum has also been deemed sufficiently decentralized, but ultimately, you know who those individuals are who wrote those white papers, and they do have some amount potentially of control. The initial transactions that happened around Bitcoin and the messaging with Satoshi was on a cryptography listserv. So I would imagine that is either an individual or group of individuals who are certainly cryptography experts. The word, of course, cryptocurrency is coming from the fact that it uses cryptography as an underlying technology in order to provide security and verification of the transactions, and in order to issue new coins as well. So that is a central technology that they would have understood. But really, it sort of goes beyond that, I think. And what also got me quite interested in this particular technology is that it's essentially network-based money rather than institution or sovereign-based money. And having worked in the internet, in the early internet in the early 90s when it was first coming around, and that was also a technology that nobody to remember now, everyone thought was quite crazy and might not last, very similar to cryptocurrencies today. But there was actually an error code in the internet and TCP/IP for the possibility for there to be a transaction, a monetary transaction that didn't work. I think that we were just without that particular technology that lent itself to this digitalness without a centralized party. There were currencies, digital currencies prior to Bitcoin that attempted to become prevalent. There was e-gold, there was Liberty Reserve, but ultimately all of those could always be traced back to a central party and were ultimately all closed by the US government. So Bitcoin, it stands out because it was the first that was able to actually create a functioning system that was fully decentralized and that was peer-to-peer, and that could not be traced back to any party, which could then be closed down.
So Diana, can I just pause for a second? Because I know that everyone wants to get on sort of Bitcoin and its value now, but I do just want to understand a couple of things about Satoshi Nakamoto in particular. So for example, at the moment, there's a certain amount of UK coverage around Craig Wright, right? And you're smiling. Someone messaged in the chat, is Satoshi Nakamoto Craig Wright? And I just texted them saying, do you want to raise that point? And they messaged back saying, no, I was only joking. Is Craig Wright not a feasible candidate to be Satoshi Nakamoto? Diana, I'm asking you. Yeah.
You're asking me. I think that he's been taken to court, and he's been given the opportunity to show that he has the keys to the original transactions, and he has not been able to prove that, no. So as far as I know, he has no way of proving that, whereas there is a way of proving that, and he has not been able to do that for himself. It's rather simply a claim that's been made.
Noelle, do you have a view on this?
I do not think Craig Wright is Satoshi Nakamoto, because as Diana pointed out, he would have been able to prove it. But the temptation is understandable, because one thing we shouldn't overlook, an interesting data point, I haven't seen the latest figures, but at these levels of the Bitcoin price, Satoshi is probably the wealthiest person in the world.
Right. So can I just understand something about that, right? Which is Satoshi Nakamoto is the author of the white paper in 2008, creates or mines a quote unquote Genesis block, as I understand it, right? This original block, right? Mm-hmm. I've got two questions about that. One is a little self-involved. So apparently encoded into the Genesis block, the original block, is a 3rd of January 2009 headline from the Times, the newspaper I used to work at, and it was encoded into the Genesis block, and I can't understand whether it's there. Is that just a sort of coder's joke or a date stamp? What, Noelle, do you understand that is?
It is there. Actually, when we start the Genesis block, we do encode some sort of news article, because that kind of proves the validity of the start. You can go back to this particular, you can point to, it's to give you a reference point of the date and the time of what's going on. So, I see.
So it's sort of the equivalent of a kidnap victim. You hold the newspaper up, say, it's valid.
Out there, yeah.
And so should I take any meaning from the fact that it was the Times of London that they used, or they could have used anything? Obviously, this is me staking my claim to a chunk of that original Genesis block.
Yeah.
But is there, Tavonia, is there any... But my point is there any reason to believe that Satoshi Nakamoto was UK based because of the use of that London Times article?
Interestingly, I don't know. I've been around in crypto for a long time, and I would say in terms of involvement, on the underground, there wasn't as many underground UK people and programmers in the blockchain world. I mean, there's a lot of different countries that are represented. I wouldn't say that the UK had a strong representation in the underground when it came to blockchain and crypto.
Okay, I'll appreciate that. Sort of rather like being able to sing a tune from Mary Poppins doesn't necessarily make it fun. I get that.
One point on that, James, is that people who've gone through all of Satoshi's writings have come across a lot of UK spellings, anglicized spellings. So there is cause to believe that he might have been, but then again, the time, he might have faked that. He might have put those in to throw people off the center.
Or he could have been
not that many candidates that would come to mind, but compared to the times that the Satoshi or the group who behind this were online, because we can see that through their email signatures, email stamps afterwards, apparently he, she, or they were based in the Far East. But again, that could have been manipulated data. We just don't know.
Yeah.
And just one thing, Noelle, on that point about the writing. There is this reference to the spellings, you know, color, COLOUR, etc., in Satoshi Nakamoto's writing in the white paper. Also, the fluency of the writing. Given that some people have attributed Satoshi Nakamoto's identity to, you know, could be someone who was originally Russian, could be someone who was not born up with a native English speaker. Do you think, having read the writings of Satoshi Nakamoto, that is most likely to have been a native English speaker?
I do believe so, yes. There are some colorful turns of phrase. There's a swear word thrown in there that's more commonly used among English as opposed to American speakers. So yes, I do. Or someone who just simply is incredibly intelligent, as we know Satoshi is or was, and managed to dominate more than one language.
Am I allowed, I think we're after the watershed here. Am I allowed to know what the swear word was?
Am I allowed to swear?
Yes, you are.
Okay, I think he used the word bloody, which is not the worst thing he could have said.
Firstly, I'm extremely relieved, because as I asked the question, I thought this could go very bad given the English, habit for swearing. But so let me just then ask a second question about that, Noelle, if I may, to you. So there's one thing that's quite sort of intriguing and even mystical about the hunt for Satoshi Nakamoto. And then there's something that I would have thought is quite fundamental to Bitcoin, which is that he or she, and by the way, there's no possibility it's a she. You know, I keep asking, why does everyone call Satoshi Nakamoto a he? Is it possible it's a woman?
I think all of us on this call agree that's perfectly possible it's a she, right? I mean, there aren't that many female cryptographers that we know of, but let's face it, they don't always want the limelight, right?
So Tavonia is saying, do you think it might be a woman? Sorry, Tavonia, you're muted, forgive me.
I wanted to point out that the two primary cryptographers that the technology was built on were women that built it. So I wanted to point that out.
So the
actual cryptography that was used, the two primary developers were women.
Right. Okay. So it's very possible that Satoshi Nakamoto is a woman. Okay. All right. I want to just then just get into Satoshi Nakamoto's disappearance in 2011, right? Because I think there's something quite important here in that she or he is sitting on a trove of Bitcoin that can never be redeemed. And I just want to understand what her or his disappearance means. I wanted to bring in William Hearn. William, I don't know whether you're there and we can see you. Yeah, hello.
Yes, hello.
Yeah, do you want to weigh in with the point that you were making about the disappearance?
Sure. So like you, James, I went deep down the rabbit hole of who Satoshi was and their identity for quite a while. I actually wrote a novel inspired on the subject, and I've spoken on this subject as well. But on reflection, I've come to the conclusion that Satoshi's identity doesn't really matter. But what really matters is the fact that they chose to walk away in 2011 quite abruptly without any kind of announcement or fanfare. And also the fact that they seem not to have spent any of the Bitcoin fortune that they amassed, gaining the basic part of 1 million Bitcoin during their initial mining. So as people have said, they are sitting on an absolute fortune, probably now worth 50 billion. That has not been touched. We know, we can see it on the blockchain.
Yes.
So couple those two things together. That to me is the most important question about Satoshi, because the reasons why they might have chosen to step away could have major implications for the cryptocurrency going forward.
William, thank you. Diana, do you want to weigh on that, the mystery of her or his disappearance and the implications?
It's not something that I've particularly looked into. I think sort of some things are better left as they are, and this would be one of them. I think that the only thing that might potentially be the case is that that individual got sick and passed away, or it could be that they chose to purposely remove themselves from the limelight, which would also make sense based on the type of people that I know and that have been involved in this space for a long time. They're really the type that would prefer not to be known, and that who hold their ideals to such a stance that they wouldn't want either the money or the fame involved.
Diana, I'm going to come back to the implications for the market and for the trading of Bitcoin in a moment. But Noelle, can I just ask you, is there a theory of the case about Satoshi's disappearance?
There isn't a unified theory. I mean, as Diana said, there could be many things. It is generally assumed that he is, should we say, no longer with us, because the temptation of that vast amount of wealth that he has would be very hard for even the most privacy conscious people to withstand. But then maybe it is simply the case that it is someone who, from the original cypherpunk community, who values privacy about anything else on ideological grounds, or someone who is worried about possible prosecution should he, she, or they ever come to light.
Right. So then can we get on to the implications? Because the thing that, as the price has gone up, and I think it was $58,000 plus at the last count, right? As I was looking at the value of Bitcoin, I was amazed at how little how small the percentage is of Bitcoin that is regularly traded, and how much just sits with its original owners. And Tavonia, I see you sort of nodding there. What does that say about the viability of Bitcoin as an asset if there's huge value in it, but only a tiny percentage of it is traded?
Very problematic. It's very, very problematic. I mean, it can lead to a few scenarios. Hoarding an asset is definitely not good in terms of, especially for what it was created for. It wasn't created to hoard. It was actually created to use as a peer-to-peer cash. So again, it points back to what I said earlier, and how the whole institution of it is the whole thing of it has just been kind of hijacked. And as somebody who, you know, constructed it to be a certain way and to make a certain impact, I know I personally would be a little bit disappointed, and may look to other things to help solve the problem, because obviously Bitcoin no longer solves the problem it was supposed to be solving.
Right. When I look at Bitcoin, I think to myself, wow, I can't understand why people are making this investment, not just given the hype, but also given the liquidity and volatility of the market. But having said that, I also look and realize that people who have made investments have made a fortune. So how do you explain it to investors?
Yeah, so we actually, we're not a provider of an investment advice. We don't offer any investment advice. We are an issuer of exchange traded products.
Right.
And there is simply investor demand we've seen over the last year, and a dramatic increase in institutional investor demand. And then there is, of course, retail investor demand as well for the ability to gain exposure to digital assets. If you just look at the last 10 years of Bitcoin, it's really has actually been the best performing asset of the 21st century. So there's, of course, reason why investors would.
Diana, can I stop you there? Why?
Why? Because of the growth of that asset.
No.
Because of the increase in value.
No, I understand that it's been the growth. but what's your explanation for why Bitcoin? That's the most amazing thing. Just to pause and think about it. The biggest increase in value of any asset in the world has been Bitcoin. Why?
Because it is it is actually the most dramatic financial innovation that has probably ever happened when we think about the scope of innovation that the internet has provided for. And then we think that this is now actually money that's gone from being institution based or based off some central party or government, which it essentially always has, to actually network based money, which is not controlled by anyone, and it's not just an asset, it's a network. So there's enormous network effects. It's an open source software, so it's a software protocol. And then this is an open source software, which can then be built upon by other protocols as well, and which is essentially creating the underlying infrastructure for an entirely new financial system. And that can all seem quite far off, or like quite a lot to process, but just as the internet was for anyone who lived in a world before we had the ability to use modems to access information globally, it's a global asset that isn't controlled by anyone. And then, of course, with the innovations that have happened ever since, like looking at Ethereum, then you have other layers of innovation that are building on top of this, because actually Ethereum allows for programmable money, and then as do other protocols that have since been developed as well. So this is really the basis for an incredible amount of innovation, which is still continuing, and we are still at the very early stages of that.
Noelle, can I just ask you, do you agree with that? I see that someone, I don't know who it is why, also a mystery, maybe you'll change your name, says, I think it's the first decentralized, distributed, and trustless digital ledger. Noelle, it's got, you earn no interest rate on it. You can't use it as a currency to buy almost anything, right? And so why do you think, just to answer the same question that Diana answered, why do you think it's seen such an extraordinary rise in its value?
I can answer that, but before I do, I'm going to push back on a couple of those premises. You can earn a yield on it, and you can use it to make payments. People do. every single day, as Tavonia can attest. It's not necessarily as easy as credit cards or Venmo or something like that, but you certainly can. It's outperformed everything else. One, because it started from very low value. Two, it's very speculative. Let's face it, it's an incredibly volatile asset. Just today, I think it's fallen 12% just in one day. And it's a volatile asset because it is so innovative, as Diana was saying. The reason the institutions are piling into it with vast sums are twofold. One, as Diana hinted, it's a technology play. It is a play on a new type, it is a bet on a new type of value distribution system. That is actually really quite huge. And two, it's a hard asset. This, in this day and age of infinite money printing, is something that institutions are understanding has incredible value, and what you are looking for is something that could act as an emergent store of value, something that will hold its value, hold its purchasing power in a world where fiat currencies are, the market is being flooded with fiat currencies, and that is at some stage going to devalue them against real assets.
So Noelle, just tell me, so now we're really getting to the crux of this, aren't we? There are people like me who haven't grown up trading or working in the crypto sphere, who look at the surge in its value, who accept your point about some yield or some capacity to buy and sell, but overwhelmingly look at this as driven by speculation. And then there's the argument that effectively you and Diana just made, which is, no, we're underestimating what a seismic technological innovation this is. And that's the reason for its value, i.e. that there is an underpinning to that value. Which of those two things do you fundamentally argue, speculation or innovation?
Both. There's no reason why it can't be both. I mean, Bitcoin is an entirely new type of asset that we've never seen before. And if we are going, we have a hard time understanding why it can be both of those and more things as well, because it is so innovative. It doesn't fit into the mental buckets that we grew up with. I used to work in finance and I thought I understood money. I realized now that I conflated money with numbers. I moved it around, and most of my colleagues former colleagues still think they understand money. It's only when you start to understand what Bitcoin represents that you realize you don't really understand money at all, what it even is. Bitcoin is not a currency by the typical definition of the word, although I think that deserves revisiting. It can act as money when it comes to transferring value between parties in exchange for goods and services. And it has a hard supply. That makes it an emergent store of value. It's volatile, yes, because it's a new innovation, and its narrative, its eventual use case are still being played out in front of our very eyes. But that is why institutions of all types and retail investors of all types are starting to take notice, especially when they see inflation probably coming down the line, when they see their fiat-based holdings being eroded away in terms of value. This makes sense for them as a medium to long-term investment. Okay,
thank you. Tavonia, can you just talk us through Guap coin then? Because I can understand, will it explain to us how it is and what it is and how it works? And then would you use that as a way of also addressing whether or not you think that there is possibly a big change in the way in which money itself will work?
Oh, absolutely. The need for Guap coin came about for many reasons for me on a personal level, but on a community and cultural level, it's that, yes, our values are changing. Our values are growing. We want to be empowered. We want to take our power back. But unfortunately, as people of color, our power or lack of power is attributed to, certain, other faces. So if we're seeing Bitcoin and we're seeing the new Bitcoin billionaires and we're seeing Bitcoin millionaires and we're seeing representatives of Bitcoin and we're seeing influencers of Bitcoin and they don't look like us, then that's not a real change of power for us. It doesn't represent that for us. It represents, yet another Silicon Valley thing that that's not empowering us. That's it. I mean, you just put it.
But can I ask you, is Guap coin an investment asset or is it a
No,
currency?
it's a currency. What we're attempting to build is a currency. Okay. Guap coin stands to be, we want that to be a voice representing our spending power. Right. We believe as Black folks that we are very influential when it comes to spending, when it comes to trends. But that hasn't worked to our benefit There have been times when we're putting a lot of money out, and that money is not coming back into the community. We're putting money into companies that are not acknowledging the fact that we're putting money into companies, and then some companies will even make fun of us. You know what I mean? Right. So we looked at this as a way to have a transparent way of putting money somewhere and saying, hey, this is us spending money. We deserve your respect. This is us.
And Tavonia, sorry, forgive me for interrupting. Can I just ask a question though? Is what's your expectation of what happens? Are we going to move to a world where there are dozens and dozens, possibly hundreds and hundreds of different cryptocurrencies? Is that your theory of the case?
Absolutely. There are going to be currencies representing everything, because in this world, we kind of fundamentally believe you speak with your money. You know, you can speak, but you speak.
But the only reason I'm sort of naturally suspicious of that is everything that we've seen in the digital world has shown that things trend towards monopoly or market dominance. You either have an Amazon or a Google. Is it not more likely that if Bitcoin is the cryptocurrency that's in the lead now, it becomes the dominant or remains the dominant cryptocurrency?
But I disagree. Data shows that monopolies, they go through that whole monopoly thing goes through ebbs and flows. It goes through cycles. And right now we're in a cycle of disruption. That's why you turn on the news now and you see each one of these monopolies right now being disrupted in some sort of fashion. So we're moving to a disruption of monopolies. So, and again, it's like the battle between capitalism and small business, right? You have times in the world where small business was very prevalent. Then you have times where the capitalists were very present. The big corporations are very present. It's a balance that takes place in this struggle on Earth all the time. But if you go to other countries, like if you go to Africa and you go to Ghana, you'll see this is a country that's made up of small businesses. Everyone has a small business in Ghana. Everyone sells something on the streets of Ghana. So the small business is not something that's going away. The small business is something that's here to stay, and it goes through its cycles and its battles. And I think that the currency is going to reflect that. And the currency is going to strengthen that, because it's going to give a voice. When you want something from someone, it doesn't matter how big your company is. And we've already proven that when somebody comes out with a product that everybody wants, they want that product. It doesn't necessarily have to come from Amazon. It could come from an individual. It could come from a culture. And I think that the currency is going to strengthen that presence, that it's going to give them strength to be able to perform alongside with capital markets and et cetera.
I mean, it's a massive, I mean, it's not a small thought, this, is it? The idea of community currencies, of currencies. I mean, these are really big changes. Diana, I'm going to come to you in 1 minute, if I might, on all the regulatory implications of this and of what Tavonia just said. But I just want to invite a couple of people in. Eugene Lee has made a few points in the chat, and Eugene, if you're ready, and I wanted also to bring in Jeremy Sanderson, who right at the top had made this point about, cryptocurrency as a means of money laundering. Eugene, why don't you go away in first?
No, I just wanted to say, I mean, the value that we are giving to Bitcoin is just because it is the first innovation to create such a decentralized, immutable, trustless, distributed, and permissionless ledger to keep track of where value is, right? The fact that its unit of currency, Bitcoin is given monetary value is well, a byproduct and also the reason why it works, right? Because of the proof of work algorithm, which is currently being discussed, or people doing research to try and replace it because of its energy consumption and everything. But it is the first distributed and trustless ledger. So as Tavonia was saying, it means that you are not reliant on anyone, any bank, any government to tell you this is your money, is worth this much. With US dollars or any fiat currency, as with quantitative easing or money printing, then you lose money. You lose value. You don't lose money, I guess. But yeah.
Eugene, thank you. Diana, before you respond to that, I'm just going to ask Jeremy Samuelson. I just want to make sure Jeremy, are you muted or unmuted? Let me see if we can unmute you. There you are. Yeah, there you are. Jeremy, you made the point in the chat right at the top that there's an issue here which is just about a kind of currency for money laundering.
Yes, James. I mean, I think it troubles me that at the moment, I mean, one of the great advantages of cryptocurrency is it is decentralized, and we've heard lots of points made in its favor. I am concerned, though, that sort of governments around the world who want to protect their currencies may move to regulate in a negative fashion or even close down exchanges that deal in cryptocurrencies because it's such a threat to them. And I say that not just because, you know, cryptocurrencies have nothing to do with government and money supply, etc., but also they are currently a magnet for an incredible amount of dirty money. Money laundering obviously is attracted to cryptocurrencies for all the advantages that we hear about them. But I also, you know, I also worry about things like insider dealing. I mean, when Elon Musk, you know, announced that his company was buying 1.5 billion worth of Bitcoins, the price shoots up. A lot of people come in on the back of it. I mean, we're sitting here today. Do we know whether he sold it? He has no duties of disclosure, as you would get in a normal situation of controlled and regulated markets. So I just think this risk exists, which hasn't really been factored in. And I'm sort of nervous on behalf of those who think this is the next nirvana, that it may prove to be otherwise.
And is there also not, Jeremy, a sort of a strange imbalance or a growing gap between what's expected in the banking world, i.e., you know your customer, and what's expected on on Bitcoin? Because I saw, you know, Harry Moy was making the point in the chat that, you know, there is a register of everyone who owns Bitcoin. In that sense, it's extremely transparent. It's just not necessarily your real name.
I think that's right. And I think, you know, Diana and others may be more accurate in what I'm about to say, but I think it is remarkably easy to open up a Bitcoin account and hold a Bitcoin wallet with very, very little what I would describe as know your customer diligence, which normally the banks require and ask you to validate from time to time. So I think, James, you're right. I think that there is that gap. And I think that's another reason why it's so frightening and worrying to, you know, regulators around the world.
So, Jeremy, thank you. All right, Diana, I'm going to land all of this in your lap, which is, so if you take Tavonia's point about the eventual disruption of monopolies and market dominance, you know, if you take Yijin's point about essentially a system of currencies that supplant fiat currencies, i.e., pounds and dollars, etc. And if you take Jeremy's point, which is, you know, what about all of the dark uses and abuses of cryptocurrency? Sooner or later, the regulators surely have to step in. Is that right? And if so, how?
Yeah, I think the regulators have been watching this space very closely and very involved for many years now. And in fact, a lot of the innovation that we're coming around digital currencies in, I would say, from about 2017, 18 onwards, were central banks who were looking to issue their own central bank digital currencies. So they certainly are on top of this, and crypto assets and digital currency exchanges are subject to the AML regulation. So cryptocurrency exchanges and counterparties who are dealing with digital assets, I would argue that actually there's almost more KYC and AML processes that you have to go through, and certainly for
KYC in what's AML?
Anti-money laundering.
Oh, anti-money laundering. Okay, sorry. KYC, know your customer, anti-money laundering. Okay, yes.
Yeah, so you do have to comply with those regulations, and certainly when you're a counterparty or when you are a company who's working in that space, you're going to be subject to an enormous amount of scrutiny from your counterparties, because they're conscious that this is a sector that is being watched very carefully. Then to the point of, yes, all the transactions, so Bitcoin, it's not anonymous, it's pseudonymous. Every single transaction that's ever made is published online, available to everyone. You can download a copy of every transaction that has ever happened. And yes, those are to public addresses, but ultimately they can all be traced. And it's a popular misconception that Bitcoin is a currency, or cryptocurrencies are being used for illicit activities. I think it's an easy narrative. Some people hear these stories and they kind of go on from there. But in actual fact, because of this traceability, it makes it much more easy to trace illicit potential flows of money. There's a company called Chain Analysis who's been working in that space. I mean, I've known them since 2013, and they publish a yearly report on the crypto crime report. And actually, they found that in 2020, criminal share of cryptocurrency activity was actually just 0.34%.
Oh, wow.
And that was actually down from criminal activity in 2019 was 2.1% of all cryptocurrencies activity, but that's actually gone down. I know that they work with a lot of lawmakers and regulators and institutions globally. They've just had a new hire. I think they're a head of public policy who they hired in from the FBI. So
what's their name? Sorry, Dana, what's their name?
Chain Analysis.
Chain Analysis. Okay.
And actually, because of that traceability, when there was, I believe it was the FBI investigation into Mt. Gox, two of the agents tried to actually take the Bitcoin that they had found through that investigation and keep it for themselves. But actually, because of the transparency of the blockchain, they were caught.
No, that's that's like the classic story of the cops who keep the stash.
Yeah, so it's actually much more traceable and provides a lot more potential security and prevention of those types of issues than you would have with cash currency. And I mean that obviously has pros and cons to it, but when we're talking about like prevention of crime or identifying the sources and units, at the end of the day, eventually that money needs to be spent or needs to be transferred into a bank and transferred into cash. And at those points with the traceability, you're able to pinpoint them down. But certainly if you sign up for a crypto exchange anywhere today, if it's not a decentralized exchange, which is moving into DeFi, which is a full other topic, then you will, in order to do any transactions, to connect your bank account, to load up your account with money, and to be able to transact on that network, you will be required to provide your proof of identification, your proof of address, just like you would if you were opening a challenger bank account.
Oh, interesting. Okay, Noelle, can I just ask you, what's your view then? Diana's saying, the regulators have been watching this for a while. If I was a central bank governor or worked in a treasury, I have to say I would be tearing what remains of my hair out, thinking, I'm not sure that I can stop this thing, but I can't believe that I'm going to be free from responsibility when it causes trouble.
That's a very good question, something that we are keeping an eye on because it's so relevant to what's happening today. It is true that should Bitcoin become extremely powerful and threaten the hegemony of the dollar, for instance, it is true that maybe the regulators would get nervous. But to your point, what are they going to do about it? If the United States decides to ban any trading of cryptocurrency for its citizens, that would make a definite dent in the price, but at the same time, it would be the best advertisement possible, because here we have a centralized authority trying to tell its citizens what kind of transactions they can engage in. And just look at what's been happening recently on social media and in the pop culture, not just in the United States, but around the world. I don't think any regulator would have the stomach to engage the wrath of masses with the very powerful weapon of social media at their disposal at a time when, especially among the younger generations, trust in institutions is at all-time lows. Nigeria is at the moment trying to ban cryptocurrencies by choking off access to bank accounts for any company who so much as sniffs in the direction of cryptocurrencies. And there is a massive social media campaign against this, to the extent that the government is stepping in and asking the central bank, what are you doing? Because this is not something that the economy needs right now. There's so much polarization out there. There's so much.
Noelle, sorry, forgive me, sorry for interruption. But so you wrote, I thought, a brilliant piece on this, and I was really fascinated by it. I was really fascinated by the idea of the Central Bank of Nigeria weighing in, then getting assaulted by a wave of criticism on social media, then trying to diffuse things. And I understood the point you were making, which is, it's very hard for institutions to take on networks social media networks. At the same time, at some point, those regulators are going to have to do something. So I wonder what you think that something will be.
I think that something will be what Diana's hinted at controlling the on-ramps, at identifying people as they go on and identifying people as they go off. Then again, there are some limitations to what they're going to be able to do because of technology limitations, but there is a bill at the moment currently in comment phase in the United States that will insist that not only do you identify your account when you transact on exchange, but you also have to get the destination account identified. This is very controversial because that's not really fair to the receiver, and it does put a big dampener on innovation when it comes around decentralized accounts, unhosted wallets, etc. But that is a way that they can start to track the movements. And pursuant to Diana's point, they want to be able to track suspicious transfers. There's no reason for them to track every single Bitcoin transaction. That would also incur a huge computing cost. But suspicious transactions, they can trace them on Bitcoin. We've seen many cases, as well as the one that Diana mentioned, where criminals have been caught, whereas they would not have been caught had they been using the old trusted cash and even electronic transfers. A lot of people get away with money laundering because you can erase a trail when you do electronic money transfers. You can't do that on Bitcoin, which is why as criminals aren't really using it. But I think if they wanted to control it, that's what they would do. I also think the smart move would be to figure out how can they use it.
Right. Okay. No, that's really, yeah, that's obviously, that's true. I'm gonna just come in. Harry Moore and Chris Chadwick have both got their hands up. Harry and Chris, will you, I'm aware of the time. I'm sorry I've come to you quite so late. So will you make your points punchy and pithy?
Yes, I'll try, and there's just a few things, but I'll try and make it quite succinct.
Okay.
The first is that I think Bitcoin represents a change that in 2012, when Mark Zuckerberg IPO'd Facebook, before when he did his IPO, when he went through to all the banks, he was wearing a hoodie and he was criticized for wearing a hoodie. This is the hoodie he's taking over finance now. That's what DeFi is. Secondly, I think that governments that embrace Bitcoin will actually do better. If you look at what Mayor Francis Suarez is doing in Miami, he's earned a lot of favor from launching an investigation into taxes being paid with Bitcoin, paying Miami City of Miami workers in Bitcoin, and also the City of Miami Treasury holding Bitcoin. That'll be interesting to see what the results are of that. And then also, I think when it comes to actually the usage of Bitcoin, if you look at the innovation in what's called in a service called Strike, which sits on top of a thing called a Lightning Network, what you're now seeing is I could pay you, James, in US dollars, and it will instantly become pounds on your end. So I could be in America, you're in the UK, and I make an immediate payment, and there's no significant fee. So we're seeing companies like Western Union are going to be quaking in their boots when this thing takes off.
Okay, Harry, thank you. We're looking particularly into that point in Miami. Chris Chadwick, you had a point.
Okay, can you hear me? Yeah. Just one thing I would say is that, you know, a number of people have asked a question about, you know, aren't they going to regulate this? My view on this is that a little bit like Facebook, by the time the regulators have got their act together to be able to try and regulate it, it'll be too late. You know, Facebook is already mining data and has been for years, and the government can't stop it even when they challenge it, you know, face to face.
Yeah.
So I think, you know, what Satoshi did here was a mastermind of brilliance in introducing a blockchain technology, using a Bitcoin as a mechanism for doing that. I think the Bitcoin just, you know, got adopted and went out of hand. And so he stepped out of the way. What he's really interested in is putting that blockchain out. And the blockchain technology is, people are all over it and everybody recognizes its potential.
Right. Chris, thank you. Thank you. I think that's one thing that's coming through loud and clear. Two things. One is, you know, the purpose of a ThinkIn is to come away with a better informed point of view. A heartfelt thank you to Diana, Tavonia, and to Noelle, because I really have come away. I've come away, I have to confess, with a better informed point of view, but also with a point of view. And the idea of ThinkIn was to try and make sure that you sort of pull that together. So I come away thinking 4 things. One is, first and foremost, I love Noelle's point at the top, which is embrace the mystery, right? You know, don't necessarily try and pin down who Satoshi Nakamoto is, but be delighted by the not knowing. I am, and I have to say, I also think that William Hearn's point, which is not who was he or she in 2008, but why did she or he disappear in 2011? It's a much more intriguing question. And I like the fact, thank you, Tavonia, for us cementing the fact that it's as possible for it to be a woman as a man, given your point about those 2 cryptographers who were instrumental in creating the bedrock of this technology. I like to, and my co-founder Katie Vanek-Smith will particularly like this, the both and version of speculation and innovation, that you don't have to be backing the table saying this is all a bunch of speculative nonsense. It could be speculatively frothy, but it could also have a very profound innovation that underlies it. And then I really sort of like the distillation of your point, Diana, around the scale of technology transforming money that was put by Harry just now as sort of hoodies versus suits. That, you know, this is the arrival of the, you know, the hoodie culture. I have to confess that I don't understand what that potentially means. It's taken me a long time to understand money and how the use of money affects economies and what the systemic implications of that are. And it means that the fourth and final thing I come away with is partly prompted by Tavonia's point that if you're really creating cryptocurrencies, how do you do it with a sense of equity? How do you do it in a sense that actually this is going to improve economic outcomes for those people who have, you know, the least access to capital and the least access to opportunity? And I'm deeply skeptical and nervous about the capacity of cryptocurrency to do that without any regulatory intervention. And I'm really struck listening, frankly, to Diana, you and Noelle, by just how inhibited regulators are from being able to intervene because how complex this is. So I come away with those things: embrace the mystery, speculative and innovative, hoodies versus suits, and oh my God, that's a regulatory bind the regulators are in. So thank you for helping us through a better informed point of view. Apologies to those who joined us hoping that we would nail down the identity of Satoshi Nakamoto in this hour, but hope you found it informative and useful. It was a really fascinating opportunity for me. Thank you for the chance to learn more, and thank you. We can't applaud you, Diana, Tavonia and Noelle, but we can wave our gratitude at you. So thank you very much, everyone, for joining us.